Good evening, students. This is the day 5 of the Practice to Pass webinar for the September 2021 exam, and we have already covered audit risk on the day 1. We covered internal controls on the day 2. We covered substantive procedures quite extensively on the day 3 and a significant proportion of day 4. Now it's time to cover the minor areas so that we do not fall into the category of unfortunately failure students. I started my first webinar with this important slide, which is in front of you: why students fail in audit and assurance exam. And if you could remember, I told you that you need to work on your typing speed from now onwards. If you could work on your typing speed from now onwards, still you have got good enough time that you can bounce back and you can make it up. You got to make sure that you are attempting at least 3 OTQs per day, or ideally speaking 2 rounds of 3 OTQs each, which means 6 OTQs per day. In the Kaplan kit there are 40 OTQs in total. I think so, 40 OTQs in total. So let's assume another 40 or 50 OTQs in the BPP kit. That makes around 80-90 OTQs, and we have got still 30 days in the exam, approximately 30 days in the exam. So if we are going to attempt 3 OTQs per day, we will end up finishing all the OTQs. So that's a very important point if you want to make sure that you are going to score good enough marks in the OTQs. But I would still recommend that attempt 6 OTQs per day so that you can finish them off around 25th or 28th August, and you could re-attempt those OTQs just to make sure that you score more than 24 marks in your section A. Do not fall into the trap of ignoring the knowledge-based part. Whenever you are attempting a long question, if there is a knowledge part associated with it, if there is a knowledge-based part in a past paper question, pay attention to it, give respect to it. Second last point has been addressed. I think I have tried my level best to teach you the exam technique or the answer technique with respect to audit risk, with respect to the internal control systems, and with respect to substantive procedures. Now comes the last part, and that's the only part which is yet to be addressed by me during this particular series of webinars. That is the minor areas. So we need to cover minor areas, and in order to cover minor areas and in order to make sure that we end up among the successful students for the September 2021 exam, let's straight away go to the first minor area of the day. The first minor area of the day is called ethics. Ethics is a very important part of the overall ACCA. The professional body, our professional body, ACCA, they try to pay huge respect and huge protocol to this particular topic. In any syllabus, even if you are attempting SBR, advanced audit, or for that matter, audit and assurance, if in the syllabus, if in the course content, if in the study guide there is ethics, you should consider it as one of the most important topics, because ACCA examiners love to test this particular topic because they want to build you as a final professional accountant, an ethical one. So they are going to test it at every place. Now, where ethics is going to be tested? Option number 1, as a part of a long question. Option number 2, OTQs. Option number 3, as a knowledge base. So it's a hot topic. It could be tested in any form. So let's start ethics. And with respect to ethics, we need to study 3 things only. Number 1, the fundamental principles, the rules, the guidelines. It's called the fundamental principles. Number 2nd thing which we need to study is called the threats which cause us the problem, which tend to make us compromise on the fundamental principles. And then last thing which we need to study is safeguards. Safeguards are those actions which an audit firm or you as an individual are going to apply just to make sure that those threats are not that significant, just to make sure that there is no compromise on the fundamental principles. So there are 3 things we need to cover. Number one, fundamental principles. Number second, ethics. Number three, safeguards. It will take around 5 to 10 minutes. Then I'll take your questions. Let's start with the fundamental principles. So in order to memorize, or in order to keep these fundamental principles in mind, I end up using or utilizing a mnemonic called ICOP square. ICOP, COP, but there is a square, so another P. ICOP square. The first I, the first alphabet I, it stands for integrity. What does integrity means? Now this is knowledge base. You got to learn the definitions. Integrity means that the professional accountant should be straightforward and honest. They should not go into anything which something like bribe or anything. So you should remain honest with in all your professional relationships. ICOP square. The second thing is called C. C stands for confidentiality. So all the professional accountants must respect the confidentiality, and they all should make sure that they are never going to disclose any information which they have acquired as a result of their professional and business relationship to anyone. You are not going to reveal the information to your friend, to your neighbor, to your cousin, to your friend of a friend. No one. You are not going to utilize those confidential information, not for your personal advantage, nor for any other reason. So ICOP square. The third element is called O for objectivity. Objectivity means you are not going to be in favor of the client, and you are not going to be against the client. So you got to remain unbiased. You got to remain neutral. That's called objectivity. Second last P stands for professional behavior. You got to make sure that you obey all the relevant laws and regulations, because if you're not going to obey the relevant laws and regulations, that is going to discredit the profession. You are going to cause damage to the profession body and damage to the overall ACCA, overall chartered accountancy. The last one is called P for professional competence and due care. As a professional accountant, as an auditor, as an accountant, you got to make sure that you are competent enough to do the job, and you have to make sure that whatever you are performing it with care, with diligence, with care. You should not be working with in a rush. So if that should not be an acceptable excuse that I was in a rush and I committed a mistake. No, you got to make sure that you work with diligently, and you got to make sure that your knowledge and skill is up to the mark. So this is how these fundamental principles are made up. This is called ICOP square: integrity, confidentiality, objectivity, professional behavior, professional competence, and due care. So all of us needs to make sure that these fundamental principles are followed. Now, if we all want to follow these fundamental principles, there is a problem, and the problem is very much practical, and the problem is called threats. So there are certain threats which are going to create problems when I'm going to follow these fundamental principles. And what are those threats? Let's explore what are those threats. The threats could be divided into 5 categories, and in order to remember those threats, I usually use a mnemonic called ASSIF or ASIF. So it's called ASSIF. The first A stands for advocacy threat. You cannot promote or defend your client at any platform. So if your client is asking you to come up and visit us for the a bank meeting with respect to a loan agreement or something, I can't go over there, because I can't be seen as taking the sides of the client. I can't promote them. I can't defend them. I can't defend them in front of court. So it's called advocacy threat. ASSIF. The second S is called the second alphabet is called S, and S stands for self-interest. So an auditor has to make sure that there is no self-interest. And in order to avoid self-interest, the auditor should not have any shares in the audit client. There should not be any fee dependency. The audit fee should be dependent on the amount of work rather than on the profit of the company. We should not accept any gift or hospitality. We should not be involved in any kind of loans or business relationships with the client. If there is an employment opportunity with the client, that creates a self-interest. If there is an outstanding fee for a very long period of time and the client has not paid it as yet, that creates a self-interest. My audit fee cannot be dependent on the financial outcome of the client. It's called contingency fee. Let's say your client offers you the audit fee should be 10% of the net profit. This is called contingency fee, and this is not allowed. Litigation with a client. If you are having litigation with a client, that creates a self-interest. So these are called self-interest. Then the second S stands for self-review. You cannot prepare the financial statements for the client and then audit it, because you're not going to identify the mistakes, because nobody wants to criticize its own work. Secondly, there is a possibility that you might not be able to identify misstatement in your own work because you're not that good at it. ASSIF. I stands for intimidation threat. Intimidation means the client is creating an undue pressure. The client is intimidating you. They are warning you. They are saying, we are not going to pay your fees. We are going to come up with a litigation against you. These are called intimidation threat. If you are too much or financially dependent on one particular client, if you drive 70% or 20% or 30% of your audit fee from one particular client, that is more than 15% fee from one particular client, you seem to be financially dependent on that particular client, and that fee dependency is called self-interest threat. And there is a possibility that client could make you under pressure, and then it will lead to intimidation threat. The last threat is called familiarity threat, which is long associations or personal relationships, whether they are blood relations or any other relations. Gifts and hospitalities also could create familiarity threat. So we all want to make sure that we follow the fundamental principles called ICOP square, but there are threats, and those threats usually create problems. And in order to overcome those problems, there is a thing called safeguard. Before I start safeguard, if there is any question, I would like to answer those. Okay, Ahmed, if you are not feeling confident with respect to substantive procedure, there is one solution to that. And that solution is you need to solve all those substantive procedure questions at least twice, and then you will feel super confident. Trust me and apply this technique. Okay, Ajwa, I will do it. Atar, if you want to use ICOP square, whatever you feel like, the important agenda is you should remember the mnemonic and you should remember everything. Go on, Hashir, go on. Okay. Ajwa is saying you had to tell me how much time we need to spend on a long question. Okay, we'll break it up. We'll break it up today. We will break it up. Okay, Dawn is asking, how about if the client provides water or lunch during the audit? Is this wrong? Ideally speaking, this is wrong. Why I'm saying that? Because if I am the client, I'm not going to come up with ordinary lunch or ordinary drink. I will make sure that those lunches or those dinners are of the highest possible quality. So somehow or the other, I will try to influence you. So it's not appropriate, because there are no free lunches, my friend. So they are going to get something out of you. So ideally speaking, you should not seek lunches or dinners. So how can I differentiate between self-interest and intimidation? If you are having a financial or non-financial interest as an auditor, that's self-interest. But if the client is creating a problem for you, the client is saying, okay, fine, if you are not going to agree with us, we are going to do this, we are going to do that. Now that's an intimidation. Intimidation threat comes from the client. Sonam is saying, I'm not feeling confident for OTQs. I believe OTQs. In order to be confident with respect to OTQs, you got to solve the OTQs from both kits. There are 40 OTQs in Kaplan kit, so there are roughly 40-50 OTQs in BPP kit. That makes 90. If you are going to attempt 6 OTQs per day with solution, you will end up solving each and every OTQ before the exam twice. And even if you are going to solve 3 OTQs per day, you would still finish all the OTQs before the exam. So start your OTQs now. I wonder, did you solve 3 OTQs yesterday? Did you solve 3 OTQs today? So that's the thing. Yes, that's the thing. If you're doing it, then there will be no problem. Water or food is clearly trivial matters, right? If the question says luxury food, is it a threat? Any luxury item is a threat. Water or food is trivial. That depends. I believe steak is not trivial. So it depends what you have been offered. It depends. I said, ideally speaking, you should create or you should manage your own food. Most welcome, Sonam. You should start. Definitely, you should. Everyone should. Okay. Okay, Vidisha. Okay. Sir, any tip regarding when to think about AIU, when to think about completeness, existence? All the question does not state. Okay, I'll let you know. Eamon is asking, what if I'm auditing a hotel and also staying there? That's a separate story. That's an unusual circumstances. But just imagine you are not auditing a hotel or a restaurant, but they are say at the lunchtime they are saying, okay, hold on, don't take out your lunch box because we have ordered some really nice pizza for you. And if this continues on a daily basis, don't you think you will feel indebted? Someday or the other they will try to influence you. Yes, Somya has come up with a very good explanation. She's saying by providing food and water, eventually this will lead to familiarity threat, because that will create some kind of a bond, right? Yesterday we discussed that auditor is going to reconcile. Auditor was reconciling things yesterday in order to get the evidence, not for the sake of preparing the financial statements. There is a daylight between these two things. There's a huge difference. Is this clear, Samra? Yes, the threats and this all thing is tested in section A. Definitely, all this ethics is a very favorite topic of the examiner when it comes to OTQs. Yes, I can spare the last moments of today's session on the changes. I will be discussing changes within the last few minutes of the webinar. So hang on. Okay, then let's continue. So for every threat, you got to understand the possible safeguard. For example, if you are financially dependent on a particular client, what you have to do then? First of all, if you are receiving a particular or significant fee from a particular client, and that client is a listed company, and the fee you are getting out of that particular client is 15% of your firm's total income or your firm's total revenue, and if that happens back to back for 2 years, this creates a self-interest with respect to fee dependency. How can you overcome that particular thing? You got to make sure that fee is not that great. You got to make sure that you increase your overall revenue so that this percentage could fall. But if that is not possible, you got to disclose everything to the audit committee or to the non-executive directors of the client. And then you have to make sure that once you are done with the audit, you have to engage an independent engagement quality controller reviewer, and that reviewer will perform a review just to make sure, and this is a pre-issuance review, kind of a hot review, just to make sure that there is no compromise made during the year. So this is a safeguard. For every threat there is a safeguard. For example, your client is offering you gifts and hospitality. Now as an auditor, you got to judge whether that gift and hospitality is trivial, inconsequential. If that is trivial and inconsequential, with the you have to make sure that it is in the knowledge of the engagement partner or the ethics partner. Once it is in the knowledge, you can accept that. But if that gift or hospitality is not trivial, or it is not inconsequential, rather it is consequential, it is significant, then what? You are not supposed to accept that, and you have to decline that. If you have got shares in the company, You are not supposed to audit that company if you are a partner of that particular firm, whether you are an engagement partner or any other partner. If you own the shares, that audit cannot be continued. You got to dispose of your shares. But if you are not a partner, you are an audit manager or a trainee, and you still hold shares of that particular client, so what the audit firm can do, option number one, audit firm would ask you to dispose of the shares. If you're not willing to dispose of your shares, you will be removed from that particular audit engagement team. You will still be part of the audit firm, that client will be still with our audit client, but you will be removed from that audit team to another particular assignment. So can we get loans from the audit client? No, we cannot, because this will create business relationships. But if the client is a loan provider such as a bank, we can get the loan, provided that whole transaction is on fair value terms, or it's in the normal course of business. There should not be any subsidized rates. Can overdue fee creates a threat? Yes. If there is an overdue or outstanding fee for a long period of time, people might consider that you have given a loan to the client. And if there is an overdue fee, you got to make sure that you receive your fee. Until or unless you are not going to receive the fee, you should not continue with the next year's audit. You should not continue with the work, and you got to make sure that the full pay amount is paid for the last year. Otherwise, you're not going to continue. Okay, any other question? Very important thing, which is called contingent fee. Contingent fee is an arrangement in which the client offers to the auditor that the audit fee should be based on the, let's say, the net profit of the client. Let's say in accordance with the earning per share of the company. If the audit fee is based on a particular financial outcome of the company, this is not permitted, this is not allowed, this is strictly banned, because this will create a huge self-interest. Just imagine the client's year-end net profit seems to be 100,000, but at the end of the audit, I realized that there is an impairment expense which need to be written off, and the client has not charged that particular impairment expense of 50,000. Should I speak to the client to write that impairment expense of 50,000? If I'm going to ask the client to write off that impairment expense, their net profit will fall from 100,000 to 50,000. And let's say my audit fee was 10%, so it will fall from $10,000 to $5,000. So what should be my reaction? I think I will ignore that particular adjustment. And this particular thing, it creates contingency. This contingent fee arrangement creates self-interest, and that is why it is strictly banned and it's not allowed. If there is a very long association of the partner with the management, you need to rotate that individual staff from the audit team. You should make sure that they are not involved. The engagement partner or engagement quality control partner or any other key partner must not act for a period of more than 7 cumulative years. So there is a maximum limit. If I'm the engagement partner of let's say Microsoft, I can do audit for 2 years, 3 years, 4 years, 5 years, 6 years, max 7 years. I can't continue my relation with for the 8th year. If a familiarity threat is created, let's say on the 3rd year or on the 4th year, I need to be removed. But if there is no familiarity threat whatsoever, even then the maximum time allowed is 7 years. And once I have been removed, I need to serve a cooling off period, and the cooling off period is 5 years for the partner, 3 years for the engagement quality controller reviewer, and any other key partner it's 2 years. Any other question from you now? EQCR, engagement quality controller reviewer. I have solved all OTQs of the kit, but those containing assertions and substantive procedures are not understandable to me. No matter how hard I try, it's difficult to understand the assertions, because you are not that good with respect to substantive procedure questions. You should not solve the OTQs of the substantive procedure first. First of all, you need to focus on the long questions of the substantive procedures. Once you are comfortable with the substantive procedure long questions, automatically the OTQs will become easier. If the hospitality is clearly immaterial, yes, you can accept that. Sir, auditor owning shares will not give a huge impact, right? As they may not have huge voting power and may own fewer shares. If you as an auditor holds shares in the client, you will not be considered as objective. You will be considered as biased, not unbiased. And that is why this is not allowed. Either you will be removed from the audit engagement team, but if you are a partner, the removal of the partner from the audit engagement team is not enough. So if you're a partner, you got to dispose of the shares. Otherwise, we have to let go the client. Is this clear? Okay. Engagement quality controller reviewer is assigned just to make sure that we have not made any compromise during the audit. So that's a precautionary activity usually applied by the audit firms when there is a fee dependency. So just to make sure that we haven't made any compromise, we apply engagement quality controller reviewer. Cooling off period means it's a time which needs to lapse just to make sure that the familiarity thread which was created is done and dusted. So there are familiar cooling off periods, different cooling off periods. Let's say it was 5 years for the engagement partner. So let's say I was the engagement partner of your company, let's say for 5 years, then the familiarity thread was created. Or let's say I was the engagement partner of your company for 7 years, and there was no familiarity thread, but I had to be removed because there is a limit of 7 years. Now what? Can I come back? Yes, I can come back, but after at least 5 years, and that 5 year is called cooling off period. Is this clear now? Could you please repeat contingency fee? Yes, contingent fee means the audit fee is dependent on the financial outcome of the company. Let's say, let's keep it very simple. Let's say the audit fee will be 10% of the net profit. Now, as an auditor, what do you want? What do you wish? What do you wish for? The net profit should be higher or lower? What do you wish for? Considering your audit fee will be 10% of the net profit, what do you wish for? All those who are asking for cooling off period, is this clear now? Because I've just repeated it. Cooling off periods are different. 5 years for the partner. If I was the partner, I need to at least stay away for 5 years. If I was the engagement quality controller reviewer, I have to stay away for 3 years. That's how they are different. Are you all clear with cooling off period? Ahmed is asking, after 7 years there is 2 years cooling period, right? And after extension it would be 5 years. No, it's not like that. There used to be cooling off period of 2 years in the older study text or in the older rules and regulations. It's 5 years now. Sir, contingency fee is available for non-audit services, right? If that non-audit service is an assurance assignment, then the contingent fee is still not allowed. Now, whether non-audit assignments are assurance-based services, yes, that's a topic in your advanced audit and assurance. So Soumya, if you are interested in higher net profit, that means you are biased now. That means you have lost your objectivity. That means you have got an interest in the company, financial interest. So that is why it is not allowed. Is this clear, Soumya? Yes, Sarosh, high profits. What about the fee for non-audit work done by audit company in relation to contingent fee for their work? If that non-audit work is assurance based, you're not allowed. If that is non-assurance based, okay, fine. Is this clear to all of you? How to avoid contingency fee? That's a very easy question. Make sure your audit fee is based upon your work, your hours, your effort, your risk. Don't relate it with the net profit of the company or any other financial outcome of the company. A firm having undue dependence on total fee from a client, yeah, that is a possibility. If you are going to like that, that varies. if you're if you're not a big four audit firm, but your client is a Fortune 500 company, a big company, automatically this threat will be created. If the client insists, you should block the client, block it from Instagram and block it from WhatsApp. Is it possible to offer the client to other office within the firm if the partner has shares? No, if the partner has shares, that cannot be mitigated. If the partner has shares, there is only two options. There are only two options. Option A, partner has to dispose of the shares so that the threat is removed. Otherwise, we need to let go the client. We cannot continue with that client. Are you clear, Eman? Okay, Rabia has requested to discuss the Chinese wall concept, and after that I would like to go to the past paper question. So please, all of you, can you please hold your questions for now? Otherwise it's harder to pick it up because they tend to they overlap. Okay, what's the Chinese wall concept? First of all, Ajay is saying, sir, the partner can also be removed from the engagement. Even if you have removed the partner from that engagement and you have introduced a new partner, that threat still remains there because partner is an influential person. So if the partner holds shares, there is only one option, that is you need to make sure the partner disposes of the shares. Otherwise, we cannot continue with the client. Okay, what's the Chinese wall concept? Let's say my client is not a listed company. First of all, you have to absorb that. If the client is not a listed company, you are allowed under special circumstances to, let's say, perform the payroll services or bookkeeping services of your audit client. Now watch my words, audit client. It means you are the auditor of that client and also you are providing bookkeeping services to that client. Is this allowed? This is not allowed if that client is a listed company. But this is allowed if it is not a listed company using a concept of Chinese wall. Now that Chinese wall concept is that we are going to make sure that both the teams involved in the payroll and in the audit should be separate to each other, ideally from separate offices such as London and Bristol. So this is the Chinese wall concept. Yeah, Chinese wall could be tested as in OTQ. That's it. Sayyid Umair is saying, please discuss codes of corporate governance after that. Okay, Umair, your wish, my command. Geeta is asking, what is a cooling period for external auditor? If you have served, if there is a familiarity threat, you need to serve a cooling off period of 5 years. You have to stay away. Sir, I'm having previous study text and the points are slightly different. I hope that is okay as there is written. Yes, you should not use previous textbook. You got to text me on WhatsApp and I'll send you the latest. Well, not that latest, but June 2021 study text. I'll send you the latest book. No problem. Okay, Shreya. Don't use that old text. Those cooling off periods are outdated, which you are referring. Okay, let's go to the question. Before I start the question, please take a moment and realize what type of questions could be asked with respect to this first topic called ethics. Question number 1, an OTQ. There are many OTQs available in your kits for the sake of practice. Question number 2, which could be tested out of this topic called ethics, is called knowledge based. Examiner could ask you to define ICOP square, that is the fundamental principles. You need to learn the definitions. Examiner could ask you to define the threats with one example each. So you need to learn the definition of self-interest, familiarity, intimidation. Examiner could ask you to write a couple of paragraphs on confidentiality. So there are certain occasions when we need to compromise on confidentiality. So you got to read the book and you need to make sure you are well prepared with respect to knowledge base. The last possible type of question which could be asked from this topic, which is called ethics, is a scenario based question, an application based question. Now the requirement will always be the same. Identify and explain 5 ethical threats which may affect the independence of the current and company audit of Orange Financials company. So there are two things. You need to identify the ethical threat, which you'll do from the question, and then you got to explain it. And for each threat, suggest a safeguard to reduce the risk to an acceptable level. Okay, let's start reading the question. We have got too many topics to cover. You are the audit manager of the C company and you are currently planning the audit of Orange company, who specialize in the provision of loans and financial advice to individuals and companies. C company has audited Orange for many years. The directors are planning to list Orange on stock exchange within the next few months and have asked if the engagement partner can attend the meeting with the potential investors. So you might be interested in copying all that. The directors are planning to list Orange company on stock exchange within few months and have asked if the engagement partner can attend the meeting with the potential investor. What threat will be created if the engagement partner is going to attend that meeting? Can you please answer me? Yes, Mohammed Nadeem and Waleed, you guys are absolutely right. Spot on. Yes, Somya. Yes, Angelina. Well done. No Mars, no familiarity, no familiarity. No Rehan, not self-interest. Sorry, Rehan, you're right. Advocacy. Ahmed, you're wrong. It's all about advocacy. This will create advocacy threat because the audit firm will be seen as taking the sides of the client. Their presence during that meeting will indicate as if auditor is taking the side of the client, as if auditor is supporting the narrative of the client, as if auditor wants this loan to be handed over to the client, which is not the case, which is clearly not the case, because this is not my job as an auditor. What should be the safeguard? We need to make this whole situation understand to the client, and we need to make sure that we are not going to attend this meeting. Is this clear? Is this clear? Can I have yes? Can I have yes? Yes, warrant, we should politely decline this and we should not attend this. Can I have yes? Oh, fantastic. Saroj, Soumya, Hashir, Angelina, Nadeem, Dawn, absolutely gold. Fantastic. Okay, great, Akbar. Let's see what the solution has to offer. Orange Financials company has asked the engagement partner of current company to attend meeting with the potential investors. The answer is shortened. It's shortened. You could have copied everything, because you are copying it. It takes microsecond. The directors are planning to list Orange company and the meeting with the potential investors. So it's one and the same thing. This creates advocacy threats, or this represents advocacy threat. Now you are done with the identification of the threat. You need to explain. If the audit firm will be there, the audit firm will be perceived as promoting the investment in Orange company, and this threatens the objectivity. You will not be considered as neutral now. What does objectivity means? You have to remain neutral, unbiased. But if you are going to attend that meeting, you will be considered as biased. Your objectivity will be compromised. How to manage that risk? What's the safeguard? The engagement partner should politely decline this request from Orange company because the risk seems to be too high to manage. That's it. Are you all clear? Fantastic. Yes, you have to be neutral, and even you have to look neutral. Your perception should remain neutral. Well done. Well done, Jazib. Sir, do all threats threaten objectivity? Not necessarily. Not necessarily. If you are taking bribe, your integrity is compromised. Forget the objectivity. You got to check out the immediate impact. Okay, let's continue the question. In addition, as the finance director of Orange company is likely to be quite busy with the listing. Okay, the finance director is a very busy man. He has asked the audit firm whether they can produce the financial statements. Okay, now you tell me the answer of this one. Yes, this will create self-review. Fantastic, fantastic. By the way, this is a non-listed company, so we might be interested in preparing the financial statements using that Chinese wall concept. But again, the company is looking forward to get the stock exchange listing. So ideally speaking, we should not engage ourselves into such activity, and we should politely decline this. So read this. Due to stock exchange listing, Orange Company has requested, okay, fine. This creates self-review thread. The auditor may not detect errors in the financial statements they have prepared, or they may not wish to admit the errors. So there are two things you need to explain. A, Ahmed might not be willing to, admit his mistakes, or maybe Ahmed might not be able to identify his mistakes, because usually people can't realize their own mistakes, right? That's what the that's how the life goes on. People don't realize their own mistakes, so you have to explain it properly. And considering the fact Orange Company is seeking stock exchange listing, ideally speaking, we should not be involved in the preparation of financial statement because the risk will be too high. Okay, another paragraph. During the year, the assistant finance director of Orange left and joined Current and Company as a partner. So the assistant finance director has joined the client as a partner. It has been suggested that due to his familiarity with the Orange Company, he should be appointed to provide an independent partner review for the audit. No, the familiarity thread is there, so that particular individual should not be involved. Is this clear? Can I have yes on that? Yes, if that individual was involved in preparing the financial statements, there is a likely case that he will be in a situation which is called self review. So that will create self review. The assistant finance director of Orange Company has joined. This creates self review threat. The new review partner will not be independent. He might not be able to identify his mistakes, or he may not wish to identify his mistakes. So that individual needs to serve a cooling off period, and an alternative person should be involved. Is this clear to everyone? He should be removed from the audit team. Removed. Okay. Yes, sir. It will create self-review thread. You are right. Okay. Sadaf is asking, where is chat box? Please, questions. Post your questions. Okay. Okay, I'm skipping a paragraph or two. I just want to wrap it up. I want to finish this topic and move to the next one because I want to cover many things today. The finance director has informed you that once the stock exchange listing has been completed, they would like the audit engagement team to attend a weekend away at a luxury hotel with their team as a thank you for all their hard work. In addition, he has offered a senior member of the engagement team a short-term loan at a significantly reduced interest rates. So there are two threads over here. Can you please tell me what are those and what's the safeguard? Yes, self-interest and familiarity because of that picnic, that luxury hotel trip, and that should be declined straight away because that's not trivial, and that loan will be considered again as a self-interest, and eventually it could lead to intimidation because they might make you under pressure for that, and you got to decline that as well. Luxury food not allowed, self-interest and familiarity, and somehow intimidation for loan. Yes, self-interest and intimidation with respect to loan. Well done. Well done. All of you are absolutely right. Let's see what the solution has to say. You have got 2 minutes to read this one. Read this one and let's finish this topic called ethics. Can I have yes that all of you are feeling confident? How is it familiarity? If you are going to receive gifts and hospitality from the client, that is going to be considered as self-interest and eventually leads to familiarity. What are gifts for? Gifts create familiarity as well along with self-interest. Is this clear? Can I have more yes so that we can move on? Okay, great. Fantastic. Fantastic. Thank you very much. Well, it's harder for me to cover everything, but still I would like to point out a thing. A very important knowledge base is called conflict of interest. Conflict of interest is a very unique situation in which an audit firm is involved with the audit of, let's say, company A, but the company B also approaches the audit firm, and that company B is either the direct competitor or an important customer or supplier of the company A. Let's say you are auditing Honda and Toyota has approached you for the sake of audit. So now Honda and Toyota are the competitors of each other. This creates a situation for the auditor, and that situation is called conflict of interest. Now the burning question is, are you allowed to audit Toyota considering you are also auditing Honda? The answer is yes, provided you come up with certain safeguards, and those safeguards are, you got to make sure that there are two different teams for two different audits. You got to make sure that there is very limited access to the client files. You got to make sure the information is highly secured. All the engagement teams, both for Toyota and Honda, they need to sign a confidentiality agreement. You got to make sure that you apply an independent person of an appropriate seniority who is going to apply key judgments. And you got to make sure that both the clients have given consent to that. So if you could apply all these things, you are allowed to continue with both clients. This is called conflict of interest. Another very important topic, and I was not having a plan to cover this, but let's quickly cover this one as well. Are you going to accept any XYZ audit client? Are you going to continue your relation with XYZ audit client? So let's say you are my new audit client, or let's say I have been auditing you for the last 3 years. If whether I have to consider a few things before accepting or continuing with an engagement, yes, there are certain things which I need to consider, such as, for example, I need to consider whether I'm competent enough, whether the fee will be acceptable, whether the risk will be manageable, whether I have the resources. I need to make sure that I know the I should be aware with the who are my clients, whether they are, let's say, someone with illegal source of income. So I need to know whether there is any indication of money laundering. I need to make sure that management has got integrity. If the management is not having their integrity intact, I'm not going to continue with them. I need to make sure my independence and objectivity is not compromised. I need to get clearance from the previous auditor. Let's say the client has not paid the fee for the previous audit to the previous auditor. The previous auditor is not going to give me a clearance. I need to make sure the reputation of the client is right. If the client is not having good enough reputation, I might not wish to continue with them, or I might not wish to accept them. Last thing is called preconditions for an audit. Preconditions for an audit could be tested separately. It is very important. There are 3 things without which you cannot accept an audit client. Number 1, the financial statements should be prepared in accordance with the applicable financial reporting framework by the management. They should acknowledge their responsibility. The management or the client should make sure that they have got an internal control system designed and implemented. And the last precondition is the client has to acknowledge that they are going to provide me with all the relevant information which I need as an audit for the sake of audit. These 3 things are called preconditions, and they could be tested in the knowledge base. Another thing which could be tested is called engagement letter. Engagement letter usually have discussions such as the responsibilities of the auditor, the responsibilities of the management, the limitations of the audit, the fee, things like that. Okay, let's quickly start corporate governance. Hashir is saying, can you please explain what is client screening? Client screening means that you are not going to accept any XYZ client. In fact, you have to perform a thing called client screening. And client screening means you got to make sure that you filter them out. You're not going to accept any XYZ client. You got to make sure that the reputation of the client is good, the integrity of the management is good enough, the risk is acceptable. You got to make sure that they are not money launderers. So all those things are called client screening. What is engagement letter and what is management letter? They are two different things. Engagement letter means a letter drafted by the auditor sent to the management just to make sure that the client acknowledges all the terms and conditions of the audit. So an auditor is going to draft a letter called engagement letter, and the engagement letter will be sent by the auditor usually to the client before the commencement of the audit. Samra, for 4 marks question with one example and disadvantage and disadvantage. I don't know what you're talking about. Maybe I've missed the earlier part of your. Could you say slow once again the definition of the engagement letter? Engagement letter is a letter draft by the auditor, usually draft by the auditor, 99% cases, and it is sent to the client before the start of the audit for the sake of confirmation of things. What things? Such as the responsibilities of the management and the auditor, the fee, the deadlines, the communication channel, things like that. Samra, I'm not getting your question because plan and scope of what? This is an incomplete question. Management letter is a letter which was covered on the day 2 of the webinar, internal controls. That letter is called management letter. Tendering is a complete full-fledged topic in advanced audit and assurance. I can't go into tendering right now. Okay, let's start second topic, which is called corporate governance. Corporate governance, the most important part of corporate governance is, obviously I need to skip few things. They are just for reading. You got to make sure that if your client or if a company, let's not talk about a client, if a company is following the best practices of corporate governance, they will be separate individual for the role of chairman and chief executive officer. Secondly, there should be a balance between executive and non-executive directors. If the executive directors are too great in number, they are going to dominate, or in other words, non-executive directors won't be able to constructively challenge the decisions of the executive directors. So we need to have 50% non-executive directors just to make sure that non-executive directors are good enough in the board. Moreover, we got to make sure that we understand that no executive director should be involved in the remuneration committee. So the remuneration committee, which has to establish the salaries, should only have non-executive directors in it. No executive director should be part of the audit committee. So these are few important things. We have to make sure that chairman and non CEO should be two different individuals. Last but not the least, we have to make sure that all the non-executive directors should be independent. They should not have any financial or non-financial interest in the company. Is this clear? Okay, Samra, I'll come back to that. This is from day 2 of the webinar. I can't jump from corporate governance to the audit planning in few seconds then, because if I'm going to shift, then I have to come back. You might be crystal clear then, but there is a possibility some of the students might be confused as a result. So I can't go to risk and planning for now. I'll come back to it in the WhatsApp group. I'll send a voice note regarding that. You got to remind me. Don't worry. It's on me. I'll do it. There is no such limit for non-executive directors. They have to remain independent. That's it. Now what? Okay, one important topic in the corporate governance chapter is called audit committee. You should be familiar with this one. An audit committee consists of at least 3 non-executive directors, and at least one of them should have the financial expertise. What's the objective of audit committee? The audit committee will ensure that they are a platform for the external auditors. So if there is an audit committee, the external auditor is not going to have discussions with the executive management. Rather, the external auditor is always going to come up in front of the audit committee. So what's the objective of audit committee? They will increase the public confidence. They will increase the awareness of non-executive directors, the financial awareness of the non-executive directors. If you are good at this question, give me a second. Okay, so there is a question on corporate governance, the only question we have in the kit. It's called Saxophone Enterprises. Let's read the requirement. Describe 5 corporate governance weaknesses faced by the company and provide a recommendation to address each weakness in order to make sure that the company becomes compliant with the corporate governance rules. So we got to read the question and we got to identify the corporate governance weaknesses. Now please listen to me. If you are good at this question, you can say you are done with corporate governance. So this particular question will cover everything with respect to corporate governance. Okay, Umair is asking code of corporate governance, how important this topic is. That's not important. The important thing is that you got to make sure that you are able to identify and explain the corporate governance weaknesses, and you are able to come up with appropriate recommendation. That's more important. That is in fact important. Okay, Angelina has asked a question, how to gather the understanding of the company. Look for their website, look for their historical financial statements, look for their website, look for their key ratios, look for industry averages. That is how you can understand. Okay, Saxophone Enterprises. S company has been trading for 15 years selling insurance and has recently become a listed company. The Saxophone company is required to comply with corporate governance principles in order to maintain its listed status, and the finance director has undertaken a review of whether or not the company complies. Okay, the question will start now. Concentrate. Mr. Bill is the chairman of the company, and until the last year he was the chief executive. Now, is there any corporate governance deficiency here? Can you tell me? And what's that? Yes, the chairman does not seem to be an independent person. Why I'm saying that? Because until last year he was the chief executive. He's not chief executive anymore, but considering the fact that he was the CEO till the last year, the chief executive officer till the last year, definitely as a chairman he'll be monitoring or reviewing decisions he himself took when he was the chief executive. So he does not seem to be an independent person. How to overcome that deficiency? I think in order to overcome that deficiency, Mr. Bill needs to be removed from the role of the chairman, and he may continue as chief executive again, but he should not be part of the chairman. Mr. Bill is unsure if Saxophone needs more non-executive directors, as there are currently 3 non-executive directors out of the 8 board members. So it means 5 executive, 3 non-executive. Is there any corporate governance deficiency? Yes. And what should be the recommendation? They need to hire at least what? At least 2 more non-executive directors. Well done. He is considering appointing one of his close friend who is a retired chief executive of a manufacturing company as a non-executive director. Is there any deficiency? Yes. that non-executive director which he's looking forward to hire is a friend of him, and that friend will not be considered as independent. Moreover, his that non-executive director, that potential non-executive director, is having experience of manufacturing company, and this company is an insurance service based company, so that person is not that competent, and he'll be having his independence will be compromised as well. Well done, close friend. Well done, sir. Neha. Yes, sir. Fantastic. Yes, Sarah, Rabia. Fantastic. So let's explore what the solution has to say, because we have already covered 3 corporate governance deficiencies. We only had to come up with 5, and we have already covered 3. So Bill Payson is now the chairman after having been the chief executive until the last year. The chair must be an independent person, a non-executive director, and considering he was the chairman, he cannot provide this come up with this role, because he will be considered as the roles of chair and chief executive are both very important and carrying significant responsibilities. So what should be the recommendation? I think Bill should return back to the role of the chief executive. All direct, let's go back to the question. Okay. The finance director JCOB decides on the amount of remuneration for each director is paid. Is this correct? Can you find any deficiency here? The finance director should not be involved in setting the remuneration. Who should be involved in setting the remuneration? All directors' remuneration is in the the remuneration for director is set by finance director. However, no director should be involved in setting their own remuneration, as this may result in excessive levels of pay being set. What should be the recommendation? The board should establish a remuneration committee, and that remuneration committee should establish or determine the salaries and bonuses in accordance with the policy. Is this clear? This corporate governance topic, is this clear? Dear students, you have to realize one thing. These are minor topics, and I don't have good enough time to invest 2 hours or 1 hour per topic. So I need to move on, but I don't want to create a situation in which you know nothing about a particular topic. So I'm trying to help you. You have to make sure that you invest your Sunday, Monday and Tuesday on your minor topics. One day on ethics, one day on corporate governance, one day on internal audit. So you have to work on that. Is this okay? I'm not completing full questions. Why? Because I need to move on to the next topic. I hope. What's my target? What's my agenda? Thank you very much. Sir, who sets the remuneration for NEDs? The remuneration of NED. Okay, Sarosh. The remuneration of non-executive director is not a major issue, Khalil, and it's not a major issue, sir, because they are only paid a nominal value. So their remuneration is not that an issue. The issue is the salaries of the executive directors. Maruk, if you are going to hire 2 more non-executive directors, the non-executive directors will be equal. Usually the chairman, once you incorporate chairman into it, then the number of non-executive directors becomes on the higher side. So excluding chairman, you need to have equal non-executive directors. Including chairman, the non-executive directors usually goes on the higher side. Directors, all the directors will be appointed by the shareholders of the company. Nomination committee is only going to nominate, but appointed by the members of the company. The nomination committee may consist executive and non-executive directors both. Okay, then what? Shouldn't the nomination committee only comprise of non-executive directors? No, a nomination committee could have the involvement of executive directors as well. Strictly speaking, audit committee and remuneration committees, these two committees should not have anyone, any executive director in it. Okay, Akbar, I'm going towards internal audit. Samra, if you want to use the work of an internal auditor as an external auditor, you are the external auditor of the company, you wish to use the work of the internal auditor, or if you are an external auditor, you wish to use the work of an expert. These are covered in ISS 610 and 620. You don't have to memorize the names of the standard. Just make sure that before placing reliance on the work of the internal auditor or any expert, you are confident about the qualification, the reputation of that particular individual, whether that individual is an internal auditor or an expert. You got to make sure that that particular individual is having a good enough, license, qualification. You do have good experience with that. Their integrity is intact. Make sure their work is well planned and well worked out, and on a sample basis you need to review their work as well. So this is placing reliance on the work of some expert. Rabia, please check it out now. I think there was some problem. uh, is the voice quality better now, Rabia? Sahar, I will answer that particular question through WhatsApp using a voice note. I'll do that because that's a very tricky thing. It requires a lot of time. I will come up with a voice note on WhatsApp too. Don't worry, I will. Can you please confirm whether the sound is clear, my voice is clear? Then I need to move on to the next topic. Okay. Yes, sir. If you need to remind me if I'm not going to come up with the answer within a day or two, I will. Don't worry. Okay, it's clear. Perfect. Thank you. Fantastic. Okay, another minor topic: ethics, corporate governance, internal audit. The third minor topic is called internal audit. Now, what's internal audit? Internal auditors are auditors either appointed as an employee by the company or they could be outsourced to a third party. Internal auditors do not have the objective of reporting on the financial statements. Rather, internal auditors are usually assigned as a value added activity. Internal auditors make sure that that the company's control systems are working effectively and efficiently. So they are an internal monitoring system. What kind of organization need internal audit? If the scale and diversity of activities is on the higher side, I think you need internal audit. If the complexity of operations is great, I think you need internal audit. Number of employees, if the number of employees are great, you need internal audit. You need to evaluate the cost versus benefit analysis. If the potential benefits of the internal audit seems to be higher than the cost, you got to have the internal audit. The presence of internal audit also depends on the desire of the senior management and the current control environment. If the current control environment is historically a fraudulent one, or if there are significant deficiencies in the system, I think we need to have internal audit. Internal audit is a best practice in accordance with corporate governance. So it's not mandatory, but for listed companies, it is considered as best practice. What's the difference between internal audit and external audit? External auditors expresses opinion on the financial statements, whereas internal auditors tend to look for the improvements in the company systems. External auditor reports to the public at large, more importantly shareholders. Internal auditors are ideally speaking going to report to the audit committee, and unfortunately if audit committee is not there, unfortunately they have to report to the executive management, which is very unfortunate, and that will compromise the independence of the internal auditor. because ideally speaking, internal auditors should be reporting to the audit committee, which comprises of non-executive directors. The reports of the external auditors are publicly available, but that's not the case when it comes to internal audit. The scope of work, the scope means the area of work, the focus, the attention. The area of work for the external auditor is to verify the integrity of the financial statements, whereas the scope of the internal auditor is very much wide. It depends, it fluctuates. Maybe you are involved in fraud investigation, maybe you are involved in the systems, maybe you are involved in budgeting. It varies. Who is going to appoint the external auditor? The shareholders of the company. Who is going to appoint the internal auditor? Ideally speaking, audit committee. If there is no audit committee, I repeat, then the things will go towards the management, which is not the ideal case. External auditors are always external. Internal auditors might be external, might be internal. Internal means they might be employee of the company. Okay, what activities the internal auditors usually perform? They assess the company's corporate governance, they assess the company's risk, they assess the company's internal controls, they make sure that company is performing things with value for money, that is economy, efficiency and effectiveness. Examiner could ask you what additional roles could be taken by the internal auditor. Number one, fraud investigation. Number second, IT system review, mystery shopper visit, contract audits, asset verification assignment, or any other help to the external auditor. These are the additional roles taken by the internal auditors. Let me explain a bit of one by one. What does fraud investigation means? If there is an actual or a potential fraud, the audit committee could ask the internal auditors to investigate and quantify the fraud. Try to figure out who's the fraudster. IT system review, you have to make sure that the IT systems are effective efficiently. There is no loopholes in the system. Mystery shopper visit, you are going to visit at the store of the company and pretend that you are a customer and realize what's the experience of being a customer. Try to identify the loopholes, try to identify the flaws. Contract audits, make sure that the whatever contracts the company has established itself, they are good for the company. Asset verification assignment, you have to verify the existence of the assets, and similarly you got to help the external auditor, and that's where the external auditor is going to rely on the work of internal auditor, provided the work of the internal auditor is satisfactory. Okay, another important knowledge based question: can you outsource the internal audit? Yes, it is very common all over the world to outsource the internal audit function. There are advantages and definitely there are disadvantages. Advantage number one, when we are going to outsource the internal audit, the independence of the internal audit will improve. More competent, more qualified staff can be utilized, because that firm will have a wide range of expertise. They will have definitely specialist skills, so there is a possibility that the cost will be reduced in the long term, because you don't need to have the permanent staff cost. Then the risk of staff turnover is passed to the firm, it's not your headache anymore. But there are disadvantages as well. When you have outsourced the internal audit, they might not have good enough knowledge and experience of that particular company. They might not be that flexible, they might charge you an extraordinary high fee. So these are the potential disadvantages. You got to learn at least 3-4 advantages and 3-4 disadvantages. So this is internal audit. Internal auditors could be asked to perform a value for money audit. What's value for money? You got to make sure that the activity which the company is performing is the economical one, it's efficient and its effectiveness. What's economy? We got to make sure that we are spending the least amount of money without compromising on quality. This is called economy. What's efficiency? We got to make sure that we are getting the best possible output from that particular input. What's effectiveness? We got to make sure that the overall objectives and goals and the target should be achieved. So value for money assignment could be delegated to the internal auditors. Operational audits could be assigned in order to make sure that the operations are being run smoothly and efficiently. Audit of IT system could be assigned to the internal auditor. Any financial audit, for example, let's say the financial reporting process is accurate or not, so they need to identify whether budgeting or decision making process is good. So these are the assignments which could be delegated to the internal auditors. Normally speaking, internal auditors are going to report to the audit committee. Normally speaking, the internal auditor should be hired by the audit committee. Is this clear? Is this clear? Can I have yes? Are you feeling a bit confident with respect to internal audit? Okay, some of you are asking what's mystery shopping visit. Mystery shopping visit means you're not going to reveal that you are an internal auditor. You are going to pretend that you are a customer, and you are going to observe how things are moving in the store, whether you are handed over your change, or whether you are handed a proper receipt, or how the employees are going to deal with the inquiry of the customer. So that's what you are going to do. Umair, that's a very point of tension for me. If there is a lag, maybe the lag is on your side. What if the lag is on your side? Are you all having clear voice quality and clear picture? Can I have yes on that? Oh, everyone is saying yes, 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 yes. I've at least received 25 yes. All clear. Yes, yes, sir, it's fine. Yes, it's clear in our side. Akbar is saying it's crystal clear, even I'm not having 4G at the moment. Okay, thank you, Elima. So it's fine, Umair, you got to check your internet service provider. Okay, now guess what? How to prepare internal audit? You got to learn outsourcing, you got to learn the advantages and disadvantages, you got to be prepared what kind of additional assignments an internal auditor could be assigned. Okay, now comes whether internal audit could be tested as an application based question. Yes, if you are good at this question, you are done with internal audit. Compare and contrast the effectiveness of Murray Company and Barker Company's internal audit functions. So there are two internal audit functions, one for the Barker Company, one for the Murray Company. You got to read these questions, then we'll be able to compare and contrast. Start your work now. The internal audit function at M Company consists of a head of internal audit, 2 senior internal audit managers, 4 internal audit managers, 7 internal auditors, and internal audit assistant. Well done. The department seems to be well resourced. The head of internal audit has been in post for 12 years, and the other members of the team have varying lengths of service from 2 to 15. Okay. The head of internal audit is responsible for recruiting staff into the internal audit department. So the recruitments are made by the head of internal audit, not by the management. Again, that's fantastic. The head of internal audit was appointed by the audit committee, and the head of the internal audit was appointed by audit committee. That's again fantastic. The head of internal audit reports to the audit committee, not to the management, and agrees the scope of the work for the internal audit function with the audit committee. That's ideal. What a fantastic internal audit department this is. The internal audit staff have no operational responsibility. That's gold. That's absolutely gold. The internal audit department has got no operational responsibility. Okay, now read the other department. Again, I need to skip few things. The internal audit function at Barker Company consists of chief internal auditor, 1 senior internal audit, and 1 audit manager, and 1 audit assistant. So this department does not seem to be well resourced. The chief internal auditor has been in post for 10 years, and other members of the team have varying lengths of service from 5 to 9 years. The finance director is responsible for recruiting all staff into the internal audit function. Now you know what's the problem here. The chief internal auditor reports to the finance director, again flaw, and agrees the scope of the work. This is another flaw. The internal audit team spends 50% of their time carrying out internal audit. Okay, but 50% on the time on working in the finance department. That's wrong. They should not be involved in any operational activities. Last, due to the limited number of staff in the team, this has resulted, again, the staff is on the limited side. The internal auditors are reviewing their own work. That's not good. The work of the internal audit should be reviewed by the audit committee. Barker Company's internal audit team follow a variety of standards in accordance with their own professional training. So the internal audit departments are following variety of standards. What about them? Murray Company's internal audit function follows international standards. Now, I really don't think so that you need to check out the solution, because I don't know why I'm assuming, maybe I'm wrong, but I believe that you should be confident with respect to this question. Are you confident? Are you clear with this question? Yes, 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 definitely. But still, to be on the safe side, Let's explore the solution. And all of you have got 2 minutes. Read this one. This paragraph, now listen to me first. This paragraph will make you realize that the internal audit department of Barker company is good and the internal audit department of the Barker company is poor and Murray company is good. Why? Because Barker company reports to the, let's say, finance director, whereas the Murray company reports to the audit committee. Now read this one. With the similar logic, please read recruitment of staff. Who appoints staff at the Barker and who appoints the staff at the Murray? On a sample basis, let's read this variation of standards. Let's read variation of standard. Staff at the B company follows the international auditing standards and they're consistent. Obviously, that leads to quality. On the contrary, the staff at the other client, they follows what? Random haphazard standards. As a result, they won't be able to maintain the quality and the consistency. Is this clear? Are we done? Is this clear? Okay then. Okay, thank you. Fantastic. Now what? Now I would like to start going concern, subsequent events, and OTQ, and then last minute advice from my side. So would you like, I think we need to have a break of 10 minutes, right? Okay, let's have a break of 10 minutes and then we'll, because we have already started too much ethics, corporate governance, internal audit. We need to have a break. Let's have break of 10 minutes. I'll come back at 8:35 and then we'll start going concern, then subsequent events, and then OTQs, and then a few last advice from my side. See you then. Okay, then welcome back. Okay, there is a question. Okay, Tamim Ansari is saying that you told me that you will be sharing your OTQs. Yes, I'll share those OTQs in the WhatsApp group, but I'm not going to share those OTQs today or tomorrow or day after tomorrow. First of all, you have to make sure that you are solving 6 OTQs per day, and when you are like done with 10 days and when you are feeling confident about OTQs, then I'm going to share those OTQs. No, Nadeem, this is not the case, trust me. Okay, Shreya, you have got two options. Option number one, yes, panic. Option number two, what difference does it make? The old study text or the new study text, what difference does that make? Nothing. The technique of the audit risk will be tested for 20 marks. The substantive procedures will be tested for 20-25 marks. The controls will be tested for 20 or 25 marks. So what's the point of panicking? I don't see anything which should cause you a panic attack. So ignore it. Okay. Yeah, that's the spirit. Okay. Now what? Let's quickly wrap up few more minor topics such as this one, which is called subsequent events. So what are subsequent events? An event occurring between the date of the financial statements and the date of the auditor's report. So let's imagine the balance sheet date or the date of the financial statement is 31st December, and the auditor is going to sign the audit report, let's say on 31st March. So all those events occurring after the financial statement date up to the point of auditor's report, these are all called subsequent events. And even if any fact that become known to the auditor after signing the audit report, but that has got to do with that period, the period between the financial statement and the audit report, if something is realized by the auditor even after signing the audit report, still it is considered as subsequent event. So in order to keep it simple, financial statement date to the audit report, all those events are called subsequent events. Now the question is, what is the accounting treatment of the subsequent event? The accounting treatment is always taught by the accounting standard, not by the auditing standard. So accounting standard IAS 10, which is called events after the reporting period, identifies two types of events, two types of subsequent events. Number one, adjusting event. Number second, non-adjusting event. Now the question is, what is adjusting event? Adjusting event will be an event which has some kind of condition, some kind of evidence at the reporting date. So if there were some kind of evidence or conditions present at the reporting date, that event turns out to be an adjusting event. For example, a debtor was struggling to pay off the the payment. So that was a very long standing debtor, but after the reporting date, that is after the financial statement date but before the audit report, the management realized that that client is finally bankrupt now. Now whether that particular debtor or whether the management needs to write off that particular receivable, is this an adjusting event or a non-adjusting event? Considering the fact there were conditions of the situation at the reporting date, long standing debt, so this will be considered as an adjusting event. What about non-adjusting events? Non-adjusting events are those where no condition existed at the reporting date. So for example, the balance sheet date or the financial statement date is 31st December, and let's say on 15th January or 10th February, unfortunately there is a fire or something, and because of that catastrophic event or that fire or that issue, that event has had no conditions existed at the reporting date, so that will be considered as a non-adjusting event. So there are two types of events, adjusting or non-adjusting event. Now where comes the auditor then? What's the role of the audit? That's what the accounting standard told you, adjusting non. The auditor has got a responsibility, duty of two types. Number one, active duty. Number second, passive duty. The active duty of the auditor is that the auditor must perform procedures in order to identify subsequent events which either require adjustment or disclosure from the year end date, that is the financial statement date, to up to the point of the audit report has been signed. Once the audit report has been signed by the auditor, the active duty significantly falls to a passive duty. Now I'm not supposed to apply procedures, but if I will become aware of anything, I will take action. That is why it's called passive duty. Otherwise I will not bother. My duty is over once I've signed the audit report. What's the active duty? That the auditor needs to perform procedures to identify what? Subsequent events. Now there are two types of subsequent events: A, adjusting; B, non-adjusting. If the adjusting event is material, I will ask the management to adjust the financial statements. If it is not material and the management is not willing to adjust the financial statements, I will consider it as a misstatement. I will note it somewhere, but it's not a material misstatement, and that is why I will not modify my opinion. If there is an event which is a non-adjusting subsequent event, non-adjusting event, I will ask them, and I will first of all check its materiality. If it is material, I will ask the management, considering it is material non-adjusting event, you got to disclose it. If they are going to disclose it, it's all right, perfectly fine. If they are not going to disclose it, I will ask them to disclose it. Otherwise, I will qualify my opinion. So the adjusting event will require adjustment. The non-adjusting event will require disclosure. Is this clear up to this point? Are you clear with subsequent events? Are you clear? Why issue of shares is a non-adjusting event? If the issue of share, the decision was taken after the year end, so there were no conditions existed at the reporting date, that is why it's a non-adjusting event. The passive duty means that you are not going to apply procedures to find out the subsequent events. That's passive duty. You are not performing procedures. But if you will become aware, you will take action. What's active duty? You will apply procedures. That's active duty. Are you clear? Can I have yes? Are you clear up to this point? Subsequent events. If you want to have grip on this particular topic, you need to have grip on IAS 10, which is an accounting standard in your F3 syllabus. Can I have more yes? That's great. That's great. Fantastic. Okay, how come as an auditor you are going to identify subsequent events? First of all, you got to inquire of management whether they are aware of any subsequent event and which they haven't disclosed it in the financial statement. So ask them. That's your first procedure. And then inquire the management, what procedure or system do you have to identify the subsequent event? Check out that system. Review the minutes of the members, review the minutes of the directors meeting. Maybe you will be able to identify any subsequent event. Review the accounting records such as budgets, forecast. Maybe you will be able to identify any subsequent event. Get the written representation from management that they have disclosed and adjusted or disclosed all the subsequent events. Inspect the correspondence between the management and the lawyer. Maybe you will be able to identify anything. So these are the procedures through which you will be able to identify subsequent events. Is this clear? Okay, now comes a exam question. For each of the events above, discuss whether the financial statements require amendment in order to avoid a modified audit opinion. For each of the events above, discuss whether financial statements require amendment. Now there are 4 events. How to attempt such questions? How to attempt such questions? The step 1, I will share the sheet, don't worry. Step number 1, you got to discuss the issue from the question, keeping it very brief. Step number 2, apply International Accounting Standard 10, and according to Standard 10, identify or conclude whether the event is adjusting or non-adjusting. Step number 3, apply ISA 320 materiality, that is a RAP, 0.5% for revenue, 1% for assets, and 5% for profitability, and conclude whether the issue is material or not. once you have discussed the issue from the question, once you have applied the IS 10 and you have concluded whether it is adjusting or non-adjusting, once you have applied the materiality, now you have to recommend the correct accounting treatment. What's the correct accounting treatment would be? For example, there is an adjusting material event which the client has not recognized. So you would say the client needs to write off this particular asset because this is an adjusting material event, and if they are not going to remove it, the opinion will be qualified. Is this clear? These 4 steps. Can I have yes? Yes, Varda, I'll share the file, don't worry. Is this clear? Yes, Sonam. Yes, Varda. Yes, Elima. Angelina, Shriya, Sarosh. Well done, Subaiba. Well done. Okay, let's explore the question according to this technique. Don't worry, I'll share the sheet. Murray Company. Okay, subsequent events review for the year ended 31st. So the year end of the client is 31st December, but on 2nd January, a major customer of the company went into administration, and that company was supposed to pay $211,000. Considering they are into administration now, they are probably not going to pay it. So now apply the technique. First of all, I'm going to briefly have a discussion from the question that a major customer of the Murray company went into administration owing 211,000. According to IS 10, there were conditions of the non-recoverability of this receivable at the year end. Obviously, a receivable does not go into administration overnight or all of a sudden. It takes time. Definitely, this is a long-standing debtor. So the conditions were there. So according to IS 10, it's an adjusting event. Now you have to calculate the materiality. 211,000 divided by the profit, because it needs to be written off as an expense, and 211,000 as an asset, as a percentage of asset, because it needs to be written off from the assets as well. I'm assuming it is material. I don't have time for that. I'm assuming it is material. So what will be the correct last step of your answer? Once you have discussed the issue from the question, once you have applied the IS 10, once you have said that it is material to the profit or loss account, and let's say it is material to the statement of financial position, in order to avoid modification, the clients need to write off this receivable and charge it in the profit or loss account. If they are not going to do it, the opinion will be qualified. Is this clear to everyone? Is this clear to everyone? Can I have yes on that first part? Those who have calculated the materiality, those who have answered that this was an adjusting event, well done, fantastic, all of you rock, well done. Let's solve another question according to this technique. Let's solve part 3. On 5th February 2015, there was a fire at the premises of the third-party warehouse provider, which destroyed all inventory held there. Approximately 1/2 of the M company's inventory was stored in these premises. The total value of the inventory is whatever it is. Now what? First of all, you will briefly explain the scenario from the question. Then you will apply the IS 10 and you will conclude whether it is adjusting or non-adjusting. You are not supposed to say it is adjusting, it is non-adjusting. You have to say the conditions did exist, so you have to come up with proper wording. So it's non-adjusting. Now, considering it is non-adjusting, but it is material, I'm assuming it is material, you would say that the client does not need to recognize it, but the client needs to have yes, Sarosh, you are right. The client needs to, yes, sir, you are absolutely right. Disclosure. Well done. Let's see what the solution has to offer, just to feel good. Okay, all of you have got 2 minutes. Read this solution of the part 1. 2 minutes. First of all, they are discussing the issue from the question. Then they are applying IES 10, which is subsequent event, events after reporting period, IES 10. Then what? Then they are going towards materiality. Last but not the least, they are recommending the correct accounting treatment in order to avoid the modification. Is this clear to everyone? Let's read the third part. Fire. Well, fire part. A fire destroyed inventory after the year end. So this is a non-adjusting event, as the inventory was not damaged at the year end, so there is no condition of the fire at the year end. The value is 11% of the assets and 110% of profit. So this is highly material, and if the client is not going to disclose it, this will have definitely impact on the opinion. If the client wants to avoid the modification, they need to disclose it. Is this clear? Can I start next topic, which is called going concern? Clear. Fantastic. Okay, let's start the next topic. The next topic is a very tricky one, and considering the COVID situation all over the globe, I'm not saying COVID-19 will be tested in the exam, but companies are facing going concern problems all over the world. And as a result, going concern becomes a very hot topic for your exam, not only for this one, but for the advanced audit and assurance as well. Now, what's going concern? Going concern is basically, it's an assumption. This assumption is used by the management when they are preparing the financial statements. What does that assumption say? That the company or the organization will continue in business for the foreseeable future, and the foreseeable future is at least considered as minimum of 12 months from the balance sheet or the reporting date. Now the management has to make sure that the company is going concern. If the management believes that they are not a going concern company, or if they do not intend to continue, or if they do not have any realistic chances of continuing, they should not prepare their financial statements on going concern concept or going concern basis. Rather, they should prepare their financial statements on breakup basis, also known as liquidation basis. Now you all know how to prepare the financial statements on going concern basis, because that's what you do in F3 and F7. The burning question is, how do we prepare the financial statements when we have to prepare according to breakup or liquidation basis? The answer to that question is, if we have to prepare financial statements on a breakup or going concern basis, first of all, we have to disclose that these financial statements are not prepared according to going concern, rather these are prepared according to breakup basis. First of all, a disclosure is required. Then the assets should be recorded at their fair value less cost to sell, that is the likely sales value, because you are not going to use those assets in the business now. You are going to shut it down. The inventory and receivables requires significant write-off, because probably the NRV has gone down. Probably you will be facing many bad debts now, and maybe you need additional liabilities to be recognized, such as redundancy cost. So this is what breakup basis looks like. What's the responsibility with respect to going concern? There are two responsible parties. Number one, directors, and they are responsible to make sure that company is going concern, and then if the company is going concern, they need to evaluate it, and once they are confident that the company is going concern, at least for the next 12 months, they are going to use, or they are going to make the financial statements or prepare the financial statements according to going concern basis. If they believe, the directors believe that they are a going concern company, if the directors believe that they are a going concern company, but there is some kind of doubt over their going concern assumption, they need to disclose those uncertainties. And as an auditor, we are going to audit those uncertainties, and we are going to highlight those uncertainties in the Murga paragraph from my last class. How do directors are going to judge whether they are a going concern company or not? I think they are going to check the current and expected profitability. They are going to check whether they will be able to pay off the loans. They are going to evaluate the financing arrangements. Once the directors are confident that they are a going concern company, they are going to prepare financial statements on going concern basis. And then comes what? The auditor. What's the responsibility of the auditor in respect of going concern? The auditor is responsible to make sure that the financial statements are, if the financial statements have been prepared on going concern basis, that's the appropriate use of it. They need to make sure that they gather sufficient evidence. They need to make sure that company will be a going concern company. How the auditor is going to judge whether a company is a going concern company or not? Remember the lecture number 2 of this session's webinar. I told you there are certain indicators which indicate going concern problems. For example, if the company is having net current liabilities rather than net current assets, if the company does not have a borrowing facility and they have to repay the loan or they need a loan, if the company has defaulted in loan agreements, if the company is selling off their non-current assets, unplanned sales of non-current assets, if the company is missing tax payments or they are not paying their staff, or if the company is having negative cash flows, all these factors, whether it is a legal claim, loss of key customer, loss of key supplier, emergence of a successful competitor, any catastrophe such as COVID-19, any changes in laws and regulations, these are all potential indicators of going concern problems. As an auditor, first of all, I'm going to assess whether the management has assessed the going concern assumption. If they have assessed the going concern assumption, I will evaluate their assessment first of all. I will make sure their assessment extends to 12 months. And I will apply my own procedures wherever I've got doubts over the going concern. If I've got doubts over the going concern, I will analyze and discuss the cash flows. I will assess and analyze the company's latest available accounts. I will review the loan agreements in order to understand whether my client is on the verge of breach. I will review and read the minutes of the meetings. I will have inquiries with the lawyer in order to understand if there is a case going on. I will review the events after the reporting date. Maybe a subsequent event might reveal the company is not a going concern company. Last but not the least, I will review the correspondence with the bank. I will review the correspondence with the customers. I will review the correspondence with the suppliers. Last but not the least, I would like to get the written representation from the management that they truly believe that they are a going concern company. Remember, when you have to evaluate the going concern status of a company, focus on the future, not on the past. Past does not mean that you will be able to survive in the future. Focus on the future. Forecasted cash flow statement, forecasted financial statements. Is this clear, the going concern? Yes, the written representation regarding the going concern is important. Yes. Okay, Azra is clear. Oh, Kalavani is clear, or anyone else? Are you clear with going concern? Okay, fantastic. Thank you, Ajwa, Akbar, Furqan, Nadeem, Hashir, Sarosh, well done. Okay, test your understanding too. An extremely important question according to the current situation of the planet Earth. Using the information provided, explain the potential indicators that M company is not a going concern. Now, please listen to me. In the last 3 to 4 years, this question has been tested only once. Remember, this kind of a question was there in the webinar day 2, I think. So this could be tested in your exam. Explain the potential indicators that company is not a going concern. Now, all of you have got 3 minutes to read the question up to this point, premises. You will realize what problems the company is facing. Go on, read it. If a major customer is gone, that creates going concern problems in 2 ways. Number one, 211,000 will be lost, leading to liquidity and cash flow problems. It will create a compromise on profitability. Moreover, it was a major customer. So if I will be, just imagine the company will be unable to compensate it with a new customer. A major customer is lost, so future revenues are also lost. So I told you to focus on the future, focus on the cash flows. So this creates a going concern problem. On 3rd January, the sales director left the company and that individual is suing the company for constructive dismissal. The legal case is going to create cash flow problems. Moreover, the company sales director is suing the company, that will create reputational problems as well. It will be harder for the company to recruit competent staff considering the company's director is suing the company. So loss of key, and without the sales director, it will be difficult for the company to acquire new customers. So, there are going concern problems. Read one more. Because of fire, maybe you won't be able to deliver your orders. Maybe because of fire, you will face problems. Your customers will be lost. Are you clear? Are you clear? Yes, you are right. Yes, you are right. Manri, Ashwin, Jesse, Daniel, you are absolutely right, Daniel. Yes, Nadeem. Yes, Hashir, if you are going to delay, customer goodwill will be lost, leading to future problems. Fantastic, fantastic. Okay, one more important thing. If there is a subsequent event, which is, by the way, how many categories of subsequent events do we have? 2, adjusting, non-adjusting. Now just imagine, by the way, adjusting event requires adjustment, whereas non-adjusting event just requires the disclosure. Now imagine there was a subsequent event which according to the definition of IAS 10 was a non-adjusting event. But that non-adjusting event created or converted the going concern company into a not a going concern company. Let's say there was a fire. Now we all know that fire does not have any evidence on the reporting date. The fire happened after 1 month. So according to the definition, fire is a non-adjusting event. But what if the fire has burned 90% of the stock? What if the fire has burned 80% of the factory? Now that non-adjusting event has transformed the company from a going concern company into a not a going concern company. If that is the case, that non-adjusting event will be transformed or converted into an adjusting event. So remember the rule: if a non-adjusting event unfortunately transforms a going concern company into not a going concern company, you are not going to treat it as a non-adjusting event. In fact, you are going to treat it as an adjusting event. Is this clear? This very tricky point. Is this clear? Can I have yes on that? Is this clear? If a non-adjusting event, which usually requires disclosure only, if a non-adjusting event transforms the going concern status of the company into not a going concern, in that case, only a disclosure is not enough. Rather, that event becomes an adjusting event and you need to adjust the financial statements. What kind of adjustments? Assets will be, written off, receivables will be written off, inventory will be written off, additional liabilities will be created, and breakup basis will be used. Yes, Fatma, breakup basis. Well done. Sir, on what basis are the financial statements produced if the company is not a going concern anymore? Yes, the breakup basis. If the company is not a going concern, then we have to transform the basis of preparation. By the way, if the client is not willing to adjust the financial statements, this is going to be a huge misstatement and an adverse opinion will be expressed. Is this clear? One important concept which I would like to highlight: if you have found misstatement in the financial statement, as an auditor, you are going to apply materiality and you are going to conclude whether that misstatement was material or immaterial. Let's say you realized that was material, and you realize that was material but not pervasive. You are going to ask the management to adjust that misstatement. If they are not going to adjust the misstatement, you are going to warn them that you are going to qualify the opinion. If that misstatement was material and pervasive, you are going to come up with adverse opinion. Now comes the last part and the tricky part. Listen to me. If that adjustment was immaterial, but that was a misstatement, but that was immaterial. You are not going to modify your opinion, but you are going to note down that misstatement somewhere. At the end of the audit, all those immaterial misstatements will be considered by the auditor as an aggregate. If the aggregate is material, I will ask the management to adjust at least few of them so that the aggregate is not material anymore. If they are not going to adjust, I will modify or qualify my opinion because of the aggregated material misstatement. Is this clear to everyone? That's the impact of. Okay, majority of you are clear, but Sonam is not clear, so I'm going to repeat it for her. There are three cases. Case number one, as an auditor, I found a misstatement and that misstatement was material and pervasive. I will simply ask the management to adjust that material and pervasive misstatement. Otherwise, my opinion will be adverse. Case one, done and dusted. Case number two, I found a misstatement. Case number two, I found a misstatement that was not material and pervasive, but at least it was material. Again, I will ask the management to adjust the misstatement. If you are not going to adjust the misstatement, I will not express adverse opinion, but I will express a qualified except for opinion. Case number two, done and dusted. Is this clear? Case one and case two. Are you clear with case one and case two? Because case one and case two has got to do with the last class. Are you clear with the case one and case two? Oh, fantastic. Sonam and Warren, are you clear with case one and case two? Fantastic. Now comes the case three, the last case. If there is a misstatement in the financial statement, again, I'm going to judge whether it is material, and pervasive. I realize it's not material, let alone material and pervasive. It's not material. If it's not material, I will not modify my audit opinion, but I will note it down somewhere in the audit file. If it is immaterial, it will not be adjusted. I will ask the management to adjust it. I will ask the management to adjust it because I have found a misstatement. It is not material, but still I will ask the management to adjust it. If they are not going to adjust it, I will note it somewhere. At the end of the audit, all those non-adjusted or unadjusted immaterial misstatements, I will aggregate them. And if the aggregate is material, I will ask the management, you got to adjust half of them, 30%, 20%, 60%. Make sure this aggregate is not material anymore. They are going to adjust few of them because they want to avoid the modified opinion, right? That's it. They are going to adjust few of them. If they are going to adjust all of them, that's even better. If they are not going to adjust anything out of it and the aggregate is material, I will modify my opinion. Is this clear? And if it's immaterial according to profit and revenue and material, if it is material to one perspective, you will consider it as material. With respect to that mnemonic of RAP, even if it is material with respect to one angle, you will consider it as material. As a student, you should consider it as material. It is immaterial with respect to two angles, but it is material with respect to one angle. You will consider it as material in the exam. Is this clear to everyone? Can I have few yes? Oh, that's great. That's great. Okay. Now what? Okay, now a very burning topic, very interesting topic, somewhat related to your, changes in your syllabus as well. The topic is called automated tools and techniques. Historically or usually used to be called computer assisted audit techniques. Automated tools or computer assisted audit techniques. Now, before I start this topic, I want to ask a question from you. What do you think? How the practical audit is going on nowadays? Whether auditor is matching one document with the other, with second, with the third, whether the auditors are performing all the calculations on pen and paper using calculator. How things are moving on in the industry? What do you think? Yes, everything is automated, Somya, Navneet. Yes, Sara, computerized. Yes, Furkan, softwares. Yes, Sadaf, cats are used. Yes, absolutely. All have become computerized, Ashwin. Yes, you are absolutely right, Nadeem. So, Maruf, you are absolutely right. Subhaiba, you are absolutely right. All of you are absolutely right. So, this particular topic is the need of an hour. That's what industry is doing. So that's what auditors are supposed to do. The topic is called automated tools or computerized audit techniques. Now, if we are going to divide computerized audit techniques or the automated tools, there are three categories. Historically, there used to be two. Historically, there used to be one. But in the audit and assurance syllabus, there used to be two techniques called test data and audit software. But now there is one more technique, data analytical tools. Now, what are these techniques? Let's start from the easiest one, which is test data. What is test data? There is a system, there is an enterprise resource planning system, there is an accounting software system, there is a website, there is a client system. I'm going to access that client system with the permission of client, and I will insert few test data or dummy data into the client system. Now, once I am entering those dummy data into the client system, intentionally being smart, I will enter two types of data: A with mistakes, B without mistakes. Why without mistakes and why with mistakes? I want to make sure that the data entered without mistakes will be correctly processed by the system, and I will look for the end result of that system. If the end result is the expected one, obviously I'm expecting a certain result. If the end result is an expected one, I'll be assured that the system is operating effectively. And why I entered a data with mistakes? Because I wanted to make sure that if somebody has made certain errors during the year, for example by the management, they were timely identified and rectified and spotted by the system. So I just wanted to check the system. So test data involves the auditor submitting dummy data into the client system in order to ensure that the system correctly processes it, and system prevents or detects any misstatements if there is any. That is why I entered data with mistakes. Data may be processed during the normal operational cycle, which is called live test data, or data may be entered at a special point of time, which is called dead test data. Now what's live and what's dead? Let's imagine all of you are our organization and you operate 9 a.m. to 5 p.m. And obviously your website, your system, your software, it is connected with the master files from 9 a.m. to 5 p.m. If I'm going to enter dummy data in between these hours, this is called live testing. And if I am going to enter data once your systems are not integrated with the master files, your systems are not integrated with the main server, and I'm going to enter dummy data, this is called dead testing. Live testing and dead testing, both have got their advantages. The live test data will ensure that you are going to test the system as if it is operating in the normal course of the business. But live test data entry has got a flaw as well. You might corrupt the master files. The dead testing has got an advantage as well. The dead testing or has got an advantage, and that is the master files will not be corrupted. So they've got own advantages and disadvantages. By the way, we use this dummy data thing when we were testing internal control system. Is this clear? Yes, Azra, you are absolutely right. This could be tested as knowledge base. Saroj is saying, please repeat live and dead. Live means the website. Saroj, let's consider you are auditing a particular branch of a particular bank. Now that particular branch has got a cashier. That cashier has got a software, a website, a laptop, a computer. If that computer is connected with the head office and you are entering dummy data, this is live testing. But if that website or that computer or that laptop is for now not connected with the head office, so the master files are not connected at the moment, this is called dead testing. Is this clear? Out of nowhere, my dear Jesse has asked, sir, which topics are sure to come in the exam? There are three topics which are surely part of your will be part of your exam. That is audit risk, internal controls, and substantive procedures. But let me tell you one more thing. Examiner is not going to leave everything behind. So everything will be somehow or the other somewhat tested. You got to be prepared for ethics, you got to be prepared for corporate governance and internal audit. Yes, you can put more effort on risk controls and procedures, but that's what I was emphasizing from the day one, that don't ignore the minor topics. Okay, are you clear with the test data? Let's go to the audit software, the second technique. Audit software is used to interrogate client system. How to interrogate the client system? You are going to use a software, and that software could be off the shelf software, that is a ready-made software, or maybe for the sake of that client you are going to develop and design a customized software. So whatever the type of the software is, how are you going to use the software? You are going to run the data of the client on your software in order to verify the reports produced by the client's system and the reports produced by your software are same to same. And if things are same to same, you are going to rely on the client system. This is called audit software. Audit software can perform many things. For example, audit software can help you in selecting the sample. A random sample can be selected with the help of software. Software can help you in selecting a sample over a certain amount, over a certain age, over a certain date, of a certain date. Softwares can calculate all the ratios, the analytical procedures. They can compare it with the industry average or the competitor. They can highlight if there is an unusual increase. Softwares can cast things. You know what's casting from the last class? Softwares can perform recalculation of the depreciation if you are just going to input a certain data. Software can produce reports. They can stratify the data. Softwares can, bifurcate the data into different categories. Softwares can identify if there was a change in the standing data. Softwares can produce the letters. So there are many advantages of softwares. Softwares can calculate and cast quickly. Softwares can audit more transactions, so sample size can be increased. Softwares are damn good, but yeah, definitely there are disadvantages of the softwares. Maybe the software is expensive, maybe the staff needs training, and so on. So generally speaking, what are the advantages of CATs and what are the disadvantages? You are all familiar with the advantages, disadvantages, but still I'm giving you 2 minutes to read this one. 2 minutes. Okay, Samra is saying that my voice is not clear. The voice is clear from my side, Samra. Akbar is saying you look exhausted today. I'm exhausted because this is the 5th day. So obviously I'm getting tired. A. B. I'm heartbroken because of a very obvious reason. Majority of you know what's the reason behind. Trust me, I'm unable to sleep nowadays. I just can't digest things. I just can't. I feel like crying. So that's why I'm feeling exhausted. No, I'm not interested in MRN or any other thing. No, I'm not accepting TSG as a new home. And by the way, my home is still Barcelona, not Paris. Once I believe in a philosophy, in a theory, I'm deviating from the main topic. You end up falling with a football club for once in a lifetime. That's a once in a lifetime experience. You can't change clubs. Yes, Nadeem, please cheer me up, but I know those memes are not going to work for me. Okay. Milo is asking, are we going to have more webinars? For this particular exam session, September 2021, today is the 5th day. If you have missed any of the first 4 days, you'll get the link of it. Don't worry. Yes, Akbar, it's all about Messi. It's all about Lionel Andres Messi. Okay, I'm not sleepless because of football. I'm sleepless because of a very unfortunate event, a very unexpected event relevant to football. I'm just watching news and reading articles nowadays. That's why I'm fed up. Okay. No, I'm not a plastic fan. That's why I will stick to my club. I will stick to my club. I'm saying I'm not going to consider PSG or any other club as my home. So please don't call me a plastic fan. Okay, let's continue. Okay, there are other computer assisted audit techniques as well, which were not previously part of the syllabus, and that is integrated test facilities. Now, what are integrated test facilities? This involves creation of dummy ledgers and records to which test data can be sent. This enables more frequent and efficient test data procedures to be performed live, and the information can simply be ignored by the client when printing out their internal records. Now, what's that? So imagine there is a company's system, and obviously all the data in that system is relevant to the company. But as an auditor, I will be allowed to create my dummy ledgers within that system. Now, those dummy ledgers will not form part of the final financial statements. They are dummy ledgers run parallel to the main system of the company. What's the advantage of these dummy ledgers? Not at the year end, but on an ongoing basis, on a monthly basis, on a weekly basis, on a quarterly basis, on a surprise level, any given day, I can enter few dummy transactions and I will check how the system is operating, whether the system is operating effectively or not. So this is an integrated test facility. The client systems and my dummies ledgers are integrated into one system. But the beauty of it is that there are a couple of beauties of it. There are a couple of huge advantages of it. I can test on any given day. I don't have to rely on the year-end testing. Historically, there used to be year-end testing only. And the second greatest advantage is the master files or the financial statements will not be compromised, or they will not be corrupted. So this is called integrated test facility. The second technique is called embedded audit software. Embedded audit software requires a purpose written audit program. So you are going to come up with a software embedded into the client system, and you are going to run that software into the client system. The program will be designed to perform certain tasks. The software will test certain things such as calculation, how the depreciation is calculated, how things are flagged. So in that way, you will be able to identify whether the client systems, whether the misstatements in the client system were identified by the management or not. So you will be able to, by running your software on the client system, you will be able to identify the misstatements. And once you have identified the misstatements as an auditor, you will be able to make sure that management rectifies them. And if they are not going to rectify, obviously this will have implication on the audit opinion. Let's go to the last topic, which is called data analytics. What's data analytics? Now, currently this topic is part of the F2 syllabus, the SBL syllabus, the advanced audit and assurance syllabus. It's all over the place. What's big data? What's data analytics? So all of the big organizations are gathering data. Trillions of terabytes of data is gathered on a daily basis or even on an hourly basis. If that data is used in order to identify patterns, deviations, and inconsistencies, this is called data analytics. So what's that? This could be tested as a knowledge base. Data analytics is the science and art of discovering and analyzing patterns, deviations, and inconsistencies, and extracting other useful information. By identifying those patterns, deviations, and inconsistencies, you will be able to identify the material misstatements. What are the features of data analytics? Data analytics can be used throughout the audit to help identify the risk, test controls, and part of the substantive procedures. What's the greatest benefit of data analytics? With the help of data analytics, you can test 100% of the population. With the help of data analytics, you can test more population, more sample size. You can increase the sample size. So that's it. That's about it. Yes, there are limitations of data analytics that could be tested as well. It's a very costly thing to begin with. The data protection, data security is a very tricky issue. So these are the potential disadvantages or loopholes of it. As far as syllabus changes are concerned, examiner wants you to learn that if you press window and the arrow key, oh, wait a second, you could split your screens just like that. So this is added in your exam, in your study guide. You got to learn that you can divide your screen into two parts. In the first, at one point of time you could have your question, and at second part of the screen you should have your answers. And if you're going to identify a risk of material misstatement, don't read the complete question, straight away attempt it and then continue from that portion. These are the things which are added, the big data, and these are the things, that's it, and nothing more, nothing else. There is nothing which has been added. All of you are having a fear of nothing. Yes, the future auditors need to have extraordinary IT skills, and big data and data analytics is part of the. What's bespoke? There are two types of softwares. Number one, ready-made software, such as if you are going to use Microsoft Office, it's a ready-made software. But if you are going to design and develop an accounting software for yourself, it's called bespoke software. Okay, I've got other important things to cover. Okay, one important thing. I want to share a very important thing at the end of the webinar. Please concentrate. If any one of you, by the way, whatever I'm going to explain right now, it will help you only if you attended lecture 3 and lecture 4. It will not be of a greater help if you haven't attended the lecture 3 and lecture 4 of this session's webinar. Now, if you're struggling with substantive procedures, let me give you a helping hand. If you are required to write substantive procedures, strategy number one or idea number one is think about the AEIOU. Maybe you will realize you haven't used A as yet. Maybe you will realize that I haven't used the recalculation as yet. Maybe you will realize, oh God, out of AEIOU, one thing is called inspection, and I haven't inspected anything. Maybe you will realize out of AEIOU, one thing is called inquiry and confirmation. I could use third-party confirmation, or I could have a discussion with the management. So if you're ever running out of ideas, if you're struggling with substantive procedure, if you are in a real exam situation and you are stuck and you need more procedures, think about the elements of AEIOU, and that will give you a idea out of nowhere. How does that sound? Okay, idea number two, if you're running short of ideas and you need to come up with more procedures, what you could do is that you need to think about the assertions. Maybe you will realize, oh, I haven't verified the ownership of the property, plant, equipment. So then you will realize, oh yes, I need to inspect the title deeds. You might realize I haven't verified the occurrence of the revenue. Then you will realize, oh, I need to select a sample from the sales daybook and I need to verify from the sales invoice to the finally good dispatch notes. That is how you might be able to verify the occurrence of the revenue. So if you are running short of ideas, try to think about the assertions. Idea number 3 is think about data 3. Have you discussed something with directors? Is there anything which you need to be discussed? Have you had your discussion with the third party? Have you inspected the assets? So data 3 could help you out. And then idea number 4 is usually the story of the examiner or the question itself gives you the hint. Sometimes the question will tell you there is a case going on and the question will reveal something about the lawyer. So you got to identify the lawyer is a source of evidence. The question will tell you that the finance director has revalued the non-current assets. So this gives an idea, or that gives you a hint that you got to have a discussion with the finance director and have an explanation regarding these changes. So the question sometimes gives us the hints. Last but not the least, if your accounting standards or your accounting knowledge is strong, that will help you in developing procedures. For example, the management has recognized 5 million as an intangible asset. If your IS 38 is strong, you will be able to develop a procedure that I would like to have a discussion with the management, and I would like to make sure that all those 5 million does recognize the recognition criteria, and there is no research expense in it, because that is not allowed. So these are the 5 techniques which I personally use whenever I'm short of ideas. Trust me on my statement. I have never ever learned substantive procedures. I have never tried to memorize them. Yes, with the passage of time, with the practice, you will be, some certain procedures will be memorized. But try to develop a logic and imagination in your mind, and that will be of a great help to you. Is this clear? Is this whole story clear to you? How does that sound, these 5 steps? I will share that sheet, don't worry. Yes, don't worry. Once you have typed and learned all the questions, you got, and every time you are attempting a substantive procedure question, put this sheet in front of you. Okay, we are closing up, we are wrapping it up. Now what? Now comes a very important part. I promise that I will be sharing the breakdown of the 195 minutes. So I need your input. I believe that 15 minutes is the ideal time for an OTQ. Some of you might finish it in 13 minutes, 14 minutes, 12 minutes, but not less than 12 minutes. Trust me, less than 12 minutes is not a possibility. So 12, if 12 minutes, if I take 12 minutes, 12 3 is 36, let's say 35 minutes. But that's it, that is too ideal. So at least OTQs requires 40 minutes, or to be on the safe side, the OTQs will be for what? 45 minutes. So I'm done with first 45 minutes. And by the way, I have strongly recommended to start your exam with the OTQs, because OTQs requires extraordinary fresh mind, which is at the start of your exam. Now you are done with the 45 minutes out of 195 minutes. Now comes the 30-mark question. Now when it comes to section B, now concentrate, I'm revealing very important tricks. When I'm going to start my section B, as a student you are allowed to start from anywhere. 30-mark question, 20-mark question, or the second 20-mark question, you are allowed to start from anywhere. But if I have to attempt an audit and assurance exam tomorrow morning, if I have to, that's a personal choice. I will explain why I'm saying that. I will start from the last question of the section B, which is a 20-mark question. And for those 20 marks question, and for those 20 marks, what I will do is that I will invest no more than 40 minutes. No more than 40 minutes. That's a substantive procedure related question, usually the last 20-mark question. And I know I will end up finishing that question relatively quickly. Now I'm left with 2 more questions, a 30-mark question and a 20-mark question. Let's say for another 20-mark question, same 40 minutes. Now you are left with a 30-mark question. Now it's a tricky part. How many minutes we are left with? Somebody, 195 minus 45 minus 40 minus 40. I'm left with 70 minutes. Yes, I'm left with 70 minutes. So I could go for 70 minutes for the 30-mark question. Now, why I am allocating more minutes to the 30-mark question? Why is that? Because generally or normally speaking, the 30-mark question has a relatively lengthy story. You need to read more. You need to read more words and more sentences. So how does that sound, that breakup? 30 marks OTQs, and for that we have 45 minutes. That's the breakdown I'm recommending. Obviously it's a judgmental one. Maybe somebody might finish this 30 mark OTQs in 40 minutes, and as a result that individual can allocate more 5 minutes to this 20 mark question or somewhere else. So if you could finish 30 mark question in 65 minutes and 40. Now for the sake of practice at your workplace or at your home, what should you do? You should go for 40 minutes for 3 OTQs. You need to practice a little harder, right? 60 or let's say 65 for the 30 marker question at home, and 40 is a realistic number. Let's not cut it to, let's say, okay, let's try for 38 and 38. So what is this? Please concentrate. This 45, 70, 40 and 40, this is for your final exam. But for now, for the sake of practice, try to do it in 40, try to do this in 65, try to do this in 38 and 38. Is this clear? Is this clear to everyone? For OTQs, there is no compulsory topic. Anything can be tested in OTQ, even the audit risk, even the substantive procedure, even the risk, anything, ethics, corporate governance, internal audit, you name it. Okay, fantastic, most welcome. Don't we have only 180 minutes for exam? Rest exam 15 minutes are for reading. What reading? What reading? You're allowed to read the question, right? So you can solve the OTQs. Okay, now what? Now what is left which I need to share? Okay, I'm done with this one. Okay, please concentrate. Most welcome, Somya and Hashir and Rabia. Okay, now this last file. These are the 30 questions which can do wonders for you. Now, these 30 questions, the 6 questions are relevant to risk, 8 questions relevant to controls, 11 questions relevant to substantive procedures. I wish I could couple of more into substantive procedures. I wanted to add more. I erased them. There was 1 or 2 more, but I had to erase. Then 1 question on ethics, 1 question on corporate governance, 1 question on internal audit, 1 question on going concern, and 1 question on subsequent event. That makes 30, and nothing is left behind. So these are the names of the questions. I've mentioned each and everything in it. And if listen to me, I'm not recommending you to attend June or March 2021 webinar. Don't go for that. But if you are struggling with a topic, or if you are badly struggling with a question, then the list will help you and to find out where that question is. Okay, so that's the list. By the way, we did many substantive procedure questions. We did spade fish, gooseberry, insects for you, hawthorn, pineapple beach. So as far as other questions, I remember hyacinth I did in June webinar, jasmine I did in June webinar. I think dashing and airsoft was in March webinar, and similarly Alunda and Andromeda is in March webinar or June webinar. I'm mixing it up, but definitely those questions, that number 2, number 3, number 5, number 6, number 8, number 9, All those questions which I did not cover in September webinar are there in the June webinar or in the March webinar. That's for sure. What about ethics? Orange financials, which we did today, is good enough. What about corporate governance? The saxophone, which we did today, it's in your Kaplan kit, it's good enough. What about internal audit? We did a test your understanding in the from the Kaplan book, chapter 9, that's good enough. For the going concern, solve test your understanding 3 in the chapter 11. For the subsequent events, test your understanding 4 from the chapter 11. That's it. Now it's time. Okay, Mohammed Sabir is saying, can you please share some notes on ratios? Ratios, gross profit margin, net profit margin, the ratios are same. The ratios you studied in F8, they are in the F8 book as well. You don't need any ratio notes. Are they enough for exam preparation? They are enough for exam preparation, provided you are going to type and learn these questions twice, and then you should attempt a mock exam. Okay, now what about the mock exam? See, it's not practically possible for me to mark 500 mock exams, but I'm not saying that I will not. I will try my level best to mark as many mocks as I can, but initially I would recommend and I will request, and it's a humble request from my side, please attempt mock exams and make sure your mock is marked by your tutor. Definitely you'll be having, majority of you will be having a tutor around you. Request them, make sure they mark your mock exam. If you are super duper well prepared, you have solved all the questions, your knowledge base is damn good, your OTQs are damn good, still there is a fair chance that you might fail the exam if you are not going to attempt the mock exams, if you are not going to attempt the mock exams under strict exam conditions. So you got to type, so you got to type the mock exam, so you got to attempt the mock exam, and you got to make sure that your mock exam is marked by a tutor. You make sure. Can you send test your understanding questions from Kaplan book? Don't you have the Kaplan book? I will share the Kaplan book in the WhatsApp group. You'll get it from there. Sir, are you giving a mock exam? I will allocate a mock exam or around 20th of August, and then 21st, 22nd, 23rd August I will be able to review those mock exams and come up with a feedback. Thank you very much, most welcome Aisha, thank you very much, it means a lot. Thank you Sarah. Yeah, I will share these files in the WhatsApp group immediately after the today's session. Okay, Sabir, thank you very much. If you have shared it, somebody please share the BPP kit as well. Okay, Varda, I will share, don't worry. Okay, Reha Matthew is asking a question. Sir, could you tell to how to prepare for the rest days? Reha, I will be needing at least half an hour for that. Please allow me, and I will make a schedule tomorrow. I will make a schedule tomorrow for everyone, a generalized schedule, and I will share it with all of you in the WhatsApp group. Okay. Thank you very much, Hashir. And thank you very much, Varda, and thank you very much, Warrant. Okay, are we done? Are we going? Are we done? Is it over? Is it a goodbye? No, it's not a goodbye, because one thing I promised, remember? We are not going to ignore OTQs. All over the world, students and all over the world, students and the tutors are ignoring OTQs, and as a result, students those who are well prepared for the section B, they end up failing at 47, 48, 49. So we are not going to ignore OTQs. And okay, let's start a very tricky OTQ. Very, very tricky OTQ. It is 1st July 2015 and you are an audit manager in Colorado and Company, and you are responsible for the audit of Mississippi Company for the year ended 31st March 2015. The audit is nearing completion and the auditor's report is due to be signed next week. Okay, audit is nearing completion. Year ended was 31st March. Okay. The draft financial statements recognize revenue of 18 million. This is a very tricky OTQ. This will be of a great help, I'm telling you. The draft annual report of the M company contains a chairman's statement in which the chairman has commented that she is pleased to report an increase in revenue of 20% this year. The revenue of this year is 18 million. Last year it was 17 million. The chairman is saying that the increase in revenue is 20%. Is she correct? Is she correct? Daniel, the answer to your question is there is a button in on your keyboard. It's window key. Press the window key, press it, and then arrow keys, right, left. So you will be able to split the things, and then you can allocate question on the left or question on the right or answer sheet on the left and right. So the revenue has not increased by 20%, but the chairman's statement is saying so. The report also includes an operating review, corporate social responsibility report, financial statements, and notes. So there are other information. I hope you are getting where the question is leading us. The directors of the M company have indicated that they intend to distribute the annual report to prospective investors in order to obtain additional finance. The audit engagement partner has informed the directors that the audit report is only intended for reliance by the existing shareholder and that no liability will be assumed to any other party. Okay. The audit engagement partner has asked you to draft the audit report for M company and requested that the paragraph referring to this restriction of liability is included. So the audit firm wants to limit their liability and they want to add this paragraph to restrict their liability. Okay, fine. Which of the following statements best describe the auditor's responsibilities in respect of other information? I taught you this thing yesterday. What's the auditor responsibility regarding other information? You have got 30 seconds to verify the answer. Oh, that's great. Fantastic. Majority of you are saying, in fact, everyone is saying the correct answer. That is option B. We are only responsible to do what? The auditor must read the information. According to ISA 720, we need to read it at any cost and make sure there is no inconsistency. So we need to read it. Fantastic. We are done with 161. Which of the following sections of the audit report would not be considered other information? Other information considers 3 things out of the 4. Which one does not? Other information covers 3 things out of the 4. Which one other information does not cover? Which thing other information does not cover? Well done to majority of you having answer as option D. Some of you are saying C and B. No. Why? Chairman statement is part of other information, not part of the financial statement. Operating review is part of the other information, not part of the financial statement. corporate social responsibility report is again part of the other information, not part of the financial statement, but the notes, that disclosures are part of the financial statement. That is why D is the answer. Let's go to 163. How should the inconsistency between the chairman's statement and the financial statement be referred in the auditor's report? Whether there was an inconsistency? Yes. The chairman says the revenue has grown up by 20%. As a matter of fact, it has only grown up by 7%. How to deal with it? You have got 30 seconds. 163. Where to deal it? Are you going to emphasize? Are you going to use other matter? Are you going to modify your opinion? Or are you going to use other information paragraph, other information section? Well done, well done, well done, well done. All of you, well done. Option number 1, well done. 164, a very tricky and a very important question. Select whether the following statements are true or false in relation to referring to the chairman's statement in the auditor's report. Users may be misled if other information contains incorrect information or information which contradicts with the financial statement, such as the chairman's statement. Is this statement true? That user may be misled. Is this statement true? This situation is going to create a confusion for the shareholders or for the users? True. Yes, Sarosh, it is true. Yes, Warrant, it is true. Why? Because consider yourself as a shareholder. You are going to check out the audit financial statements. You will realize that the revenue has grown up by 7%. Then you are going to read the chairman report. You will realize that the revenue according to them has grown up by 20%. You are going to say, what's going on? Whether the chairman report is wrong or the financial statement is wrong, audit report is wrong, what's going on? Yes, it is going to mislead and misguide the shareholders. So this statement is true. Second statement, user may believe that the auditor has not audited the financial statements properly if the inconsistency is not highlighted. If you are not going to highlight that inconsistency, the layman might think, the shareholder might think that the auditor has not performed the work with adequate quality. If the auditor would have performed the work with great authority and quality, either the financial statements would have been reflecting the revenue increase of 20%, or the auditor would have highlighted this inconsistency. So again, this statement is true. The auditor must expose management incompetence. Is this true or false? False. Well done, well done, well done. The inconsistency may undermine the credibility of the audit report if not highlighted. Absolutely true. If I'm not going to highlight it, people are going to doubt over the credibility of my audit report. So I need to highlight it. I'm not saying I need to modify the opinion. I just need to highlight it. Last question. In respect of the partner's request for restricting liability, how should this be addressed in the auditor's report? What was the request by the partner? Partner has asked to make sure that we are going to restrict the liability and we are going to refer it in the audit report. Where do we need to refer it? Emphasis of matter is used to emphasize something which is part of the financial statement. Basis for opinion is a paragraph which is in support of the opinion, and this restriction of liability has got nothing to do with opinion. So D is eliminated, B is eliminated. In the auditor's responsibility section, auditors just tells its responsibility. That's it. If you want to add something which is not currently part of the financial statement and you want to make sure that people realize it, you want to highlight it, you are going to use other matter paragraph. Option 3 is your correct answer. Well done. Wow, majority of you got it right. Option C, well done. Is this clear to everyone? That's it from my side. I wish and I really hope so that these 5 days, these extremely important 16 to 17 hours, we have exceeded 17 hours. I hope these 17 hours were beneficial for you. I really hope so that all this effort from you and from me will end up leading us to a success in the September 2021 attempt. I really wish that you all will pass with flying colors and I really wish you all the best, not only for this exam but for the future, all your, you know, in every walk of life. Stay happy and don't take the stress. The failure is part of the game. We all fail. This is quite normal. This is not a matter of life and death. You're not supposed to take stress. A stressed mind cannot absorb topics, cannot absorb standards, cannot absorb questions. So take it easy, relax, make a schedule for yourself. I'll make a schedule for you tomorrow, or maybe day after tomorrow. I'll make one. You got to remind me. I'll try to make one tomorrow. And this is one minor element of your life. This is not a, you know, this is not the do or die of the life. So take it easy, be honest with yourself, work harder, follow the exam techniques you have been taught, follow these questions, and please work on your typing speed, because that is one thing I can't help you on it. And improve your typing speed. And last but not the least, please, 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 my last request to you is, I am sure all of you are going to solve these 30 questions twice. I'm sure you are going to attempt at least 4 or 5 mocks. I'm sure you are going to make sure that at least one of your mock is marked. Last but not the least, my humble request is, attempt OTQs from both kits and read the solutions as well. Solve 3 OTQs in a stretch, then open up the solution, mark your answers, even if your questions are correct or if the questions are wrong. Read the solution in as much depth as you can. Thank you very much. If you still have got any queries, I am always available at, more or less always available at WhatsApp. All of you have got my number. So that's it. Now last question answer session. If anyone have got any question, please go ahead. Thank you very much, Somya. Thank you. Thank you. Okay, thank you very much. Thank you very much. Thank you very much. Thank you very much. If you are feeling confident, you need to capitalize on that. If you're feeling confident, you need to capitalize on that. You need to work harder so that you can make wonders for yourselves. Most welcome, all of you. Bye bye. And one last apology if I have been incorrectly pronouncing your name. A huge apology for that. That was purely unintentional. I'm sure you know that. Thank you very much for your valuable feedback. Thank you very much. Thank you very much. And I hope to see you soon. Yes, I hope to see you soon. Thank you very much. Yes, I will share the Kaplan and BPP kits and the Kaplan book. I will share. Ushna, one thing I'm good at, that is I can motivate students. I'm good at motivation. I'm not a good teacher, but I'm a good motivator. I will motivate you. Don't worry. Thank you very much, Dawn. Thank you very much, Hasher. Yes, I'll see you soon. Thank you very much, Komal. It's a huge compliment for me. Thank you very much. I'm so blessed. Thank you very much. Yes, I am usually available at SPM. If anybody wants to visit, you're more than welcome. Monday through Fridays, I'm available. No. Okay. Okay, this paper must be cleared in first sitting. Yes, definitely, inshallah it will. Sir, do you take online class? Yes, we are offering some kind of online classes as well. I do not teach SBL. but I would love to teach SBL, but my subjects currently are F2, F5, the costings, the management, performance management, and audit and advanced audit, triple A. After double A, it's triple A. Mohammed Nadeem, one day or the other, I'll try to visit your city. Okay, Faisalabad is in my list. After Barcelona, I'm directly coming to Faisalabad. Most welcome, Indu. And you're more than welcome, Rabia. And sir, please don't forget about the question you told me that you'll assist me with areas. Okay, yes, I'll send a voice note regarding that. Actually, students want to realize the difference between what's the audit plan and what's the audit strategy. Yeah, that's what you want. Audit plan and audit strategy. What's the difference between audit planning and audit strategy? I will. Thank you very much, Ahmed, for your kind words. Thank you very much. Vidisha, do not worry about it. Just chill. Okay, sir, it's on me. I will send a voice note. Don't worry. Okay, I think done. Thank you very much. Thank you very much for your feedback. Okay, I will subscribe to accountancy platform. Indu is suggesting me to subscribe that. I will subscribe. I am very active at Instagram. I'll check it out. Okay, Indu is saying there are mocks in the accountancy platform as well. Okay, Indu, I'll check it out. I'll check it out. Any input on managing AA and office? Yes. Make sure that you are utilizing the morning hours before you go to office. Try to study 1 hour before you go to office. And during the office, it may not sound very honest, but if you've got spare time, if your employer is allowing you, if you do not have that much of a burden, try to attempt OTQs over there. And please, and you have to manage. You have to manage. Neha, I will make the schedule and I will share. Thank you very much. Okay, thank you very much. See you soon. Goodbye. And I wish you all the best for your exam. Thank you.